Right to the market action with Henning & Walsh Asset Management President and CIO Kevin Mon and BD8 Capital Partners CEO Barbara Doran. It's great to have you both here. And as I mentioned, all the major averages finished in the final moments down here today. So second down day. Most of the sectors in the S&P, it looks like, finishing lower too, Kevin. We've seen a lot of volatility this March, which also maybe not be that atypical for March in general when you think about seasonality patterns historically. Your take on where we go from here? Yeah,
talk about seasonality. I think March Madness actually started in the stock market this year as opposed to on the basketball courts, as the S&P moved into correction territory in just 16 trading days. However, if I can expand upon that basketball analogy a little bit, I can create final four factors that I believe will lead us forward in terms of market activity. One, tariffs and trade, if we get more certainty around tariffs and trade. Two, the Federal Reserve, if in fact they continue with their 2 rate cuts this year, that could provide some tailwinds for the stock market. 3, continued spending as it relates to both artificial intelligence and as it relates to defense spending. 2 themes that were in place prior to this market pullback that I think will continue for the balance of this year. And given the pullback that we've seen, Morgan, we have some real attractive investment opportunities to consider. So tariffs and trade, the Federal Reserve, ultimately what's going to happen with AI in terms of spending and defense spending.
Yeah, and of course, we should get some more details on tariffs and trade, and we have been on a daily basis, but April 2nd is sort of being looked at as the next kind of key day for that. And right here on Overtime, as we mentioned, another key barometer on AI will be CoreWeave if we get that pricing here. Barbara Doran, I want to bring you into this conversation. Your thoughts on the market here as we have all the major averages finishing down fractionally here. But again, a lot of uncertainty in terms of what moves us higher if we do go higher in the near term. Your thoughts?
Yeah, no, I happen to agree with Kevin on the 3 things outstanding with tariffs, number 1. But what I find interesting, he mentioned how quickly this correction has happened. And I think the market, in terms of great uncertainty with unknowns, the market discounts the worst case. When they don't know it, assumes the worst. And I think we're getting pretty washed out in here because you're starting to see I've been looking for no reaction to a big tariff announcement. And you look at today, the market went down. The low was right after the opening, and then it sort of went positive. It's been hanging in there. I think investors are getting inured to the constant Trump tariff threats, which then he backs off. And now, for instance, it's been a question, is he using it as a negotiating tool? With TikTok and China, he'll cut back on tariffs if they let the TikTok deal go through, that sort of thing. So I think we're going to see more of these pronouncements, but I think investors are getting a little numb to it. And I also thought it was interesting last Friday when we had bad consumer sentiment numbers, the market actually had a big rally day. So I think the market is discounting an awful lot. And as Kevin said, there are some very interesting opportunities that have opened up, that I think you can be cherry picking along the way. And if you have cash, I certainly have been putting it to work. And by the way, for the first time, I've been adding some gold to the portfolio because I think that is a long-term secular trend with the central banks buying. It's very different than it's been used in the past as a defensive hedge against uncertainty and inflation. But that's the one thing I have to say I've been adding. So I think there's opportunities in here. Not that the volatility is over. I think that continues for a bit till the tariff uncertainty settles down.
Okay, so you're a gold bug. Kevin, I want to get your thoughts on where you see the opportunities. Barclays today put out a note. They basically said markets are underpricing trade risks and that they're switching their preference to global fixed income over equities. Yes. Do you think that's the wrong move? How do you see it?
Well, let's look to the second half of the year now that we're nearly the end of the first quarter of the year. If during the second quarter of this year we get more certainty around tariffs, if in fact the reciprocal tariffs aren't as bad as we originally thought, if in fact the tax cuts are extended, and if we learn in June that the Federal Reserve does cut interest rates by 25 basis points, those are 3 pretty strong tailwinds that could ride us out for a strong second half of the year. But I go back to those themes that were underlying this market over the last 2 years. If you look at the Mag 7, right now they're trading at about 25 times forward-looking earnings. That's the lowest they've been since the end of 2022. You can't tell me that NVIDIA, Microsoft, Alphabet, Amazon are going out of business. In fact, I'd make a very strong argument right now that we have a very long road ahead in terms of the AI revolution, which could benefit CoreWeave, in fact, over the long term. And we'll learn more about their forward-looking guidance in terms of their IPO announcement. And then defense spending across the globe. We see countries, regions, including the U.S., continuing to commit more dollars towards defense and security. So look to the large defense contracts sectors that benefit from that as well.